Now to the issue before the United States Senate, the state and local tax deduction. This week, Democrats are using the Congressional Review Act to force a vote on a resolution that would effectively repeal an IRS regulation aimed at preventing millionaires and billionaires from exploiting a tax loophole. This loophole would allow top income earners to save billions of dollars in federal taxes annually. New York City's hedge funds and private equity managers would most assuredly be some of the biggest beneficiaries under this loophole. At the same time, the taxpayers with incomes under $50,000 would see virtually no benefit. In this case, one might think my Democratic colleagues would be cheering on the Treasury Department and the Internal Revenue Service for taking decisive actions, shutting down this loophole for the wealthy. But this doesn't seem to be the case. If Democrats, and only Democrats, including the Democrat minority leader, who are arguing in favor of allowing wealthy taxpayers to exploit this loophole. Moreover, predominantly Democratic states have been actively promoting and bemoaning the loss of this loophole. The loophole I'm talking about is a concerted effort by predominantly Democrat states to help their wealthiest residents get around the $10,000 cap on the deduction of state and local taxes, which has come to be known by the acronym SALT. And these efforts to get around the cap have been called Blue State SALT Workarounds. These workarounds are essentially state-sanctioned tax shelters where wealthy residents make payments to a state or local government-controlled fund in exchange for tax credits that they can use to wipe out most or all of their state taxes. These states then want the federal government to ignore this sleight of hand and recognize these payments as fully deductible charitable contributions when they're nothing more than state tax payments. Well, that's really too cute by half. It's cheating, and these states are encouraging it, forcing the rest of the country to subsidize these tax shelters for the wealthy. The Treasury Department and the IRS have correctly determined that these workarounds are contrary to the federal tax law and have issued sensible regulations to clarify this tax treatment. In doing so, they applied long-standing tax principles that deny a charity deduction to the extent the taxpayer receives something of value in return for their charitable donation. It's simple common sense. Charity is, by definition, something done out of the goodness of your heart without expecting or getting something in return. That's certainly not the case for these workarounds. There's no charity involved. In fact, once taken into account both the state tax credit and the charitable deduction at the federal level, a taxpayer could actually receive a tax benefit that exceeds the dollar value of their so-called donation. That's not charity. That's a tax scam. Some have attempted to justify this tax scam by pointing out to state tax credit programs that existed prior to the existence of the SALT cap. But unlike the recently enacted programs, these older programs were not specifically designed to circumvent federal tax law when they were enacted. These pre-existing state tax credit programs were targeted at giving taxpayers the option of funding certain non-traditional government service activities, such as providing underprivileged children scholarships or to set aside land for conservation. My Democratic colleagues have painstakingly tried to defend these scams by claiming that they are efforts to alleviate state tax burdens on the middle class. However, this argument doesn't even pass the laugh test. It's undeniable that these workarounds will overwhelmingly benefit the super wealthy, while the middle class will receive little or no benefits. I was pleased to see at least one Senate Democrat was willing to be honest about this last night here on the Senate floor, as Senator Bennett of Colorado put it this way, quote, "The vast majority of the benefits of repealing the salt cap would go to high-income Americans. Repeal would be extremely costly, and for that same cost, we could advance much more worthy efforts to help working and middle-class families all over the country." End of Senator Bennett's quote. To illustrate this point, I have here a chart based on the nonpartisan Joint Committee on Taxation distribution analysis. They have made very clear through this chart showing who would benefit from repealing the cap on deductions for state and local taxes. While eliminating these Treasury regulations wouldn't repeal the salt cap entirely, it would effectively make the cap toothless, as more and more states would create workarounds. And let's not forget, the repeal of the cap is their ultimate goal. As you can see here on the chart, the majority of the benefits from repealing the salt cap, 52%, would flow to taxpayers with incomes exceeding $1 million. Now let's think about that just for a minute. Less than half of 1% of all tax returns report incomes exceeding $1 million. Yet, according to the Joint Committee on Taxation, these taxpayers would receive 52% of the tax benefit if this resolution of disapproval went through. Now, another 42% of the tax benefit would go to taxpayers with incomes between $200,000 and $1 million. When combined with those earning over $1 million, then you can see that fully 94% of the tax benefits would go to taxpayers with incomes of over $200,000. To put this into perspective, then only 7% of the tax returns report income exceeding this level. Now, compare this to taxpayers with incomes under $200,000, which is about 93% of all taxpayers. According to the Joint Committee on Taxation, this group would receive a measly 6% of the benefits from repealing the cap on state tax deductions, as the Democrats are proposing. Only a handful of taxpayers with incomes under $200,000, or about 3%, would actually see any benefit. 97% of the taxes, or 97% of these taxpayers wouldn't see even 1 penny of benefit from taking away the salt cap. So, very simply, there you have it. The same Democrats who have criticized the 2017 tax bill as supposedly benefiting only the wealthy, can you believe it, are now actively pushing an agenda that would overwhelmingly benefit the wealthy. This goes to show how off base Democrat criticism of tax reform really is, as we've heard it over the last 2 years. Far from being a giveaway to the wealthy, tax reform passed 2017 was concerted effort to provide tax relief for everybody. Republicans accomplished this tax cut for everybody primarily by lowering tax rates across the board. But we also did it by repealing or limiting certain regressive tax benefits, such as the deduction for state and local taxes, the SALT provisions we're talking about. We then used that revenue to increase benefits to better target low to middle income taxpayers. For example, we doubled the child tax credit from $1,000 to $2,000 and increased the refundability of that tax credit. We also nearly doubled the standard deduction to the benefit of many lower and middle income taxpayers. We likely couldn't have made these changes if we hadn't limited the deduction for state taxes that mostly benefited the wealthy. Democrats who wrongly associate this SALT cap with a tax increase on middle-income folks simply aren't looking at the facts or at tax reform as a whole. 2 years ago, Republicans created a tax cut for an overwhelming majority of Americans. This is true even for taxpayers affected by the deduction for state taxes. Before tax reform, many upper middle income taxpayers, particularly those in the high tax blue states, had to pay the alternative minimum tax. We refer to that as the AMT. Well, for anyone who used to pay the AMT, after you struggled through the incredible complexity of the AMT rules, you realize an unfortunate fact. The AMT clawed back the deductions for your state tax payments. Therefore, many of these taxpayers saw little or no benefit from this deduction before tax reform. Now, Democrats don't like to admit this inconvenient truth, but it's true. They don't seem to let facts interfere with their political rhetoric. So yes, these same taxpayers are likely now affected by the SALT cap. But because Republicans largely did away with the AMT, at the same time lowering everybody's tax rate, they still received a tax cut. And let's not forget, these taxpayers no longer have to deal with the mind-numbing complexity of the AMT. Now, question, do Democrats really want middle-income families to have to go back to the nonsense of figuring out the alternative minimum tax every year? I've heard Democrats try to justify their effort to undermine the SALT cap by claiming it was part of some nefarious plot against blue states. That's simply not true. Yes, more taxpayers in blue states are affected by the cap given the high state taxes that those states impose on their residents. But the fact is, on average, every income group in every state saw a tax cut under the 2017 tax cut bill. This isn't just coming from this Senator, Chuck Grassley, but an analysis by the Liberal Institute on Taxation and Economic Policy. In addition, recent filing season data released by H&R Block shows on average residents of even high-tax states received a tax cut. We've also heard fears that the cap will negatively affect blue state revenues as higher income taxpayers flee to lower tax jurisdictions. But concerns about such an exodus aren't new and didn't start because of the cap. They started because of sky-high taxes in those very same states. In November 2017, prior to the enactment of this tax cut and reform bill, the Wall Street Journal wrote about, quote, the great progressive tax escape, end of quote. This article focused on IRS tax return data between 2012 and 2015 that showed billions of dollars in taxable income leaving high-tax states for low-tax states due to taxpayer migration. Last time I checked, there was no SALT cap between 2012 and 2015. While there is some anecdotal evidence that taxpayer migration might be starting to increase due to the cap, it's not entirely clear at this point. Mr. President, I ask unanimous consent to insert into the record a Bloomberg article from May of this year entitled "Blue States Warned of Salt Apocalypse. It Hasn't Happened." That's the name of the article.
Without objection.
Yeah. As this article highlights, revenue for blue states this tax season were up, not down. The ratings agency Moody's also released a report in April saying that there was no discernible signs of individuals who were fleeing high-tax states as a result of the SALT cap. However, even if taxpayer migration were to occur as a result of the cap, the answer to the problem isn't repealing the SALT tax or SALT cap. It's for the states to look in their own backyard at their own tax and spend policies. The truth is, these state politicians aren't concerned about their own taxpayers. What they're really worried about is their continued ability to gouge those taxpayers with ever-increasing state and local taxes, which used to be subsidized by taxpayers from other states through the federal tax code because there was no SALT cap. In closing, I want to turn back to this very chart, the same one I discussed earlier. For Democrats still on the fence as to whether to vote to repeal the IRS regulations on the SALT workarounds, you ought to study this chart very closely. So I ask a question to the other side. Could you, with a straight face, argue that a vote to protect these workarounds is not a vote to provide a massive tax cut for the wealthy? Because this chart shows it's helping the wealthy. For Democrats who intend to vote for this tax scam anyway, I don't want to hear any more long-winded speeches about how the tax bill of 2017 benefited the wealthy. The fact is, after tax reform, the wealthy now shoulder a larger share of federal tax burden than they did under the prior law. This was made possible by reforms to the regressive tax expenditures, such as our capping of the SALT deduction. What's more, these reforms allow us to target more tax relief to lower and middle income taxpayers. State workarounds to the SALT cap are nothing more than state-sanctioned tax shelters. By voting to undermine that cap, Democrats are voting to enrich the wealthy taxpayers, who they persistently have vilified as not paying enough. Moreover, they put the tax relief provided to middle class into jeopardy. I yield the floor.